Everybody loves chasing stock market highs, but when volatility strikes, where can you find calm? For millions of investors across the globe, the answer is three simple letters: BND. Stay with me until the end because I'll hand you a quick checklist that shows whether this quiet giant deserves space in your portfolio. First things first, BND is the Vanguard Total Bond Market ETF. Its mission is straightforward: track the Bloomberg U.S. Aggregate Float-Adjusted Index, essentially the scoreboard for investment-grade bonds. By mirroring the index instead of trying to beat it, the fund keeps costs razor-thin and lets broad market performance do the heavy lifting. What exactly sits inside? About 2/3 of BND is U.S. Treasuries and government agency debt, the global yardstick for safety and liquidity. Roughly 1/4 is high-grade corporate paper issued by household name companies across technology, healthcare, financials, consumer goods, industrials, and utilities. The final slice is agency-backed mortgage securities, bundles of home loans with federal guarantees. Every holding is investment grade, so default risk stays low by design, while still delivering a steady stream of interest. Geography matters too. Although the bonds are dollar-denominated, their influence is worldwide. The US dollar remains the reserve currency, and its bond market sets reference rates from Frankfurt to Kuala Lumpur. Holding dollar bonds can diversify a euro, yen, or emerging market portfolio, and often dampens currency swings during regional crises. So, who is BND really for? Anyone seeking balance rather than fireworks. Long-term savers who want a counterweight to stocks, retirees who value capital preservation, or global investors eager for a single core bond position. Historical data shows that high-quality bonds typically cushion equity sell-offs, and BND reinvests every coupon automatically, perfect for hands-off investors who don't have time to curate individual bonds. Now for some actionable tips. 1. Decide your fixed income percentage before buying. Don't let headlines push you into or out of the fund. 2. Pair BND with stock ETFs from different regions to build a truly diversified portfolio. 3. Use regular automatic purchases, dollar cost averaging, to smooth out interest rate noise instead of betting on the next central bank move. 4. Remember that BND sits in the intermediate part of the yield curve, so its price will wobble when rates change, but not as violently as long-duration or junk bond funds. Ready for that promised checklist? Ask yourself, do I need a cushion against stock volatility? Do I prefer investment-grade safety over speculative yield? Am I comfortable holding assets tied to the US dollar? If you answered yes to 2 or more, BND is worth a deeper look. No single fund is a silver bullet, and the past never guarantees the future. Yet, as a core bond building block, simple, diversified, and low cost, BND has earned its global reputation. Just a heads up, nothing in this video is financial advice. It's all for information only. Explore more tips on money and investing at Money Nova's website. If you found value in this breakdown, hit subscribe, post your questions below, and I'll see you in the next video.